Market cooling, but inflation still on the rise? Another rate hike? Who is buying and selling right now? Hi, I'm Tracy Nichols, an Arizona realtor here in Lake Havasu City, bringing you today a nail-biting market report for the first half of September 2023. Welcome everyone to Market Monday. Today we have 4 hot topics to discuss and cover as trends in the housing market continue to shift and change course. We are here today to navigate through the data and understand what it can entail. So let's get to it.
Our first hot topic of the day, buyer demand versus supply of inventory. What every buyer I'm working with wants to know. When supply is higher than demand, that is a buyer's market. Much like the end of 2008, that is what we witnessed. When demand is higher than the supply, that is a seller's market, like now. We are still coming out of a red hot seller's market, and we are now experiencing a slight seller's market that is still cooling as the gap between supply and demand slowly closes. Here's a meme I absolutely love that explains this with musical chairs. In a buyer's market, you have 8 chairs and only 5 people playing. Seller's market, you have 5 chairs and 8 people playing. Today, you have 2 chairs, 123 players, and 1 chair just got sold. The housing market, always a reflection of broader economic and societal trends, is currently experiencing a lull in demand, but an even more pronounced dip in supply. Looking at this graph, take note, the demand is as low as it was in 2008. However, the supply is even lower. While back in 2008, supply was through the roof. Why is this? What is causing this scenario? On the demand front, several factors contribute to the slowdown, such as economic uncertainty, changes in priorities, or even tightened lending standards. Potential buyers are cautious due to economic fluctuations, choosing to delay big investments like home purchases. With the evolution of work and lifestyle patterns, many are reevaluating the need for home ownership or choosing alternative living arrangements. Financial institutions, wary of market volatility, have tightened lending criteria, making mortgages less accessible for many. But while demand has cooled, supply has frozen even more dramatically. Factors affecting the supply side include high construction costs, homeowners waiting it out, and even investors' hesitation. Rising material prices and labor shortages have hampered new home construction. With the market's uncertainty, many homeowners are choosing to hold on to their properties, hoping for better selling conditions in the near future. Real estate investors, typically a driving force in the market, are holding back, awaiting clear market signals. The culmination of these dynamics, a market where choices are limited and both buyers and sellers tread cautiously. So we're treading. Why? Inflation brings us to hot topic number 2, inflation in correlation with interest rates. Whenever the demand outweighs the supply, we are going to see inflated home list prices pushing the housing markets. Fed rates have increased in an attempt to counter inflation as what they have done in the past. However, buyers aren't buying because of the increased interest rates and because the supply isn't there. Supply is not there because sellers are becoming increasingly hesitant on exchanging their low interest rate for a higher one in their new home. Thus, this kind of gridlock effect happens, or a stalemate in reverse, if you will. The market still fluctuates daily, but very little now. The Feds have recently announced last week that they are now pausing the rate hikes despite inflation, in hopes that this action will assist in correcting the market imbalance. There has been talk of reducing interest rates once the inflation rate has stabilized and become consistent in order to entice sellers to once again sell and buyers to buy. The so-called high mortgage rates of approximately in the 7% range that aren't really historically high in comparison with nearly 20% rates in the early 80s are stalling the mortgage demand. Mortgage applications are down 27%, and that is the lowest they have been since 1996. CNBC reports home builder sentiment is negative. This is the first time in 7 months. Current sales conditions down. Sales expectations down. Buyer traffic down. Affordability down. It's a lot to fix, guys. Let me know in the comments what you think, if you think that rate pause by the Feds is going to be able to pull it off. So the rates are at 7%. This brings us to hot topic number 3, Zillow. They are offering a program of 1% down, which is only available in Arizona for now. Guys, here's the quick breakdown of this Zillow program. 20% down equals a conventional loan. No PMI required. Any down payment under 20% is going to require PMI, private mortgage insurance. The banks will require it. Just like any government-backed loans such as FHA, they require PMI. The minimum amount for an FHA with exquisite credit has been 3.5%. So Zillow offering this 1%, we got to know what's up here. The median home here in Lake Havasu City, PMI on that price of that home is going to cost you, I would say, anywhere from $400 to $500 a month. That's quite a bit added up over the year. We're talking $6,000. Not to mention your interest on a 30-year home loan with 1% down. It's going to be a lot, guys. It's stressing me out just thinking about it. You could be underwater potentially before even closing escrow if the market continues to shift in the direction it's reflecting. Remember your 5 professionals to ask about your financial health and options that are right for you, or this could be detrimental. I like to remember them as having your back and keeping your decisions that you make from being fatal. FATAL. Financial advisor, attorney, tax advisors, accountants, and your loan officers. Talk to these guys. Let them know what's going on. All right, let's close this up with our final hot topic. Big question I'm being asked by buyers and sellers is, who are the buyers and sellers right now? My clients that are interested in buying or selling, they're asking who is actually making these moves right now. Hey guys, people still need to move. Sellers are relocating. They are moving into older folks' community housing. Second homes and vacay homes are still selling. So the market is absolutely never at a standstill, but is constricted. The buyers that are buying right now are also relocating for a number of reasons. There is still the migration going on, moving to remote areas outside of big cities, an opportunity created from the ability to work at home or from anywhere for that matter. Families are still outgrowing their homes. Older folks are still downsizing. Some are buying because they simply have nowhere else to go. Rentals are becoming more and more scarce and so forth. And this is a housing shortage. It is reported nationally that investors are backing out. I myself invest in real estate and also work with investors, flippers, cash buyers that are also backing off and cooling down. A positive to that, there is less competition for residential buyers and most likely less enticing cash competition for residential buyers. Being a vacation destination city and recreational area, while also being a great place to live full-time, we have our very own market built from that.
From the challenges of 2008 to the unique dynamics of 2023, the U.S. housing market showcases resilience, adaptability, and the ever-present interplay of supply and demand. If you found this video helpful, hit the like button and don't forget to subscribe for more helpful market updates. Again, I'm Tracy Nichols, realtor in Lake Havasu City, ready to serve you when it comes to any of your residential real estate needs. Find my contact info in the video description below and don't hesitate to reach out with any questions or requests. Remember, whether you're a seasoned investor, first-time home buyer, or a seller, understanding the past helps navigate the future. Stay informed and always consider the broader historical context in your real estate journey. See you next time.